Okay, again, this is 11B2. We've transferred the information from the trial balance over to the worksheet with the balances shown. And now we're going to do the 4 adjusting entries shown. First one, which is A and B because it requires 2 different entries. Cost of ending inventory on December 31st was $480. So what must we do here? Cost of ending inventory, $480. All right, so how do we do that? If it starts with a 736 debit, what are we going to do here? 736 credit, so that we zero out merchandise inventory from its beginning inventory. Since that's a credit, what's going to be our debit for this one? Income summary. Good. So 736. I'm going to put A's beside both ones so I can see where they connect. Now, again, ending inventory shows 480. So what are we going to debit for that? Good. Merchandise inventory for 480. And it needs a credit, so we're going to come down to income summary for the same amount, 480. So that reflects our ending inventory, or our physical count. Next one we have insurance expired. Same thing as insurance used. So what is our debit for this one? Okay, so insurance expense, is it listed here? So we're going to add it down here. And how much has been used? 112. And we're going to put a C beside that one. What's the credit go to if we've had insurance expire or be used? Prepaid. We're going to reduce prepaid insurance asset by $112. So debit equals credit. Now, depreciation on store equipment is given in the amount of $90. So what's my debit for depreciation expense equipment? Yes, depreciation expense, specifically for equipment, gets debited for $90. That will be D. What will be the credit? Good. Accumulated depreciation, store equipment, it's a contra account, therefore it gets credited. Last one, accrued wages of 150. Accrued means earned. So therefore, what is the debit for this one? Do we have a wages expense up here? You always look first here. Yes, we do. And how much is it? 150. And what would be the credit? Good. Do we have a wages payable up here? So we're going to add it to the bottom. And the amount is the same, 150. So now we're going to go ahead and total up your adjustment column, and hopefully you balance. This just verifies that debits equal credits. So go ahead and add them up and see what you get. Pause for a second there. Okay, the total for the adjustments is 1568. And what do you do when you're in balance? Double rule. Now, let's see how much we've retained. In the adjusted trial balance columns, we're going to figure out new balances for all accounts shown, except for what? So let's do income summary now so we do it right. What are we going to bring forward for the adjusted trial balance for income summary? Both of them. So we're going to put a $736 debit and a $480 credit. Now the rest we're going to look at both the trial balance columns and the adjustments to come up with possibly an adjusted balance. So for cash, what are we going to have? Same as it began with, $960. Accounts receivable, $1,600. Merchandise inventory. Good. We got rid of the beginning, and now we're bringing forward only the ending inventory. How about for prepaid insurance? A debit and a credit, $1,000. How about for store equipment? $3,200, just the amount we started with. Now, accumulated depreciation store equipment started with $1,680. We have an adjustment of $90. So what's the new balance? Good. $1,770. When they're both the same, meaning both debits or credits, you add. In accounts payable, $1,408, what we started with. And the big thing is, make sure you're putting them in the correct column. And the capital count stays the same, 2576. We've already done income summary, bringing forward both balances for beginning and ending inventory. Hardware sales is a revenue account, therefore it is a credit. And go ahead and bring forward the others, taking into account the adjustments. $728 for return and allowances, $688 for discount, $7088 for purchases, $240 for discounts, $248 for purchases, return and allowance. How about for wages expense? $24.54, adding both the beginning balance and the adjustment. And rent expense remains what it was. Telephone, same, and miscellaneous, same. Now, do not forget to continue down to these accounts we added when adjusting. So insurance expense comes down for $112. Depreciation expense for $90, and wages payable for $150. Now you're ready to total up your adjusted trial balance. Just pause. 672. 21672. Double rule to show your imbalance. Forgot to tell you to start. So, you did? Thank you. Even though now I'm looking at it. Okay, now for income statement. Hopefully you remembered what to do. What do we transfer over to the income statement? Everything from income summary on down unless there's something that is a liability, asset, or capital, correct? Which there happens to be at the end. So, what about for income summary? What are we transferring over? Both. Because we need both beginning and ending inventory. So you're going to still transfer over both, just like shown on that adjusted trial balance. And the rest of them, we're just coming on down, with the exception of wages payable. Does that go on the income statement? Where does it go? Balance sheet. So we don't forget, why don't we put it on the balance sheet right now? So on the balance sheet, that last one that we added, let's put it over on the balance sheet so we're not tempted to put it on the income statement. And then let's transfer over all of the others. Now to keep it nice and neat, if you just keep your lines on the same row, then everything will come out correctly when you're trying to add your net income or loss. So when you're finished, go ahead and add up your debit column of your income statement and then add up the credit column, and we'll go from there. Let's do a pause. So what did we get for the debit column of the income statement for the total? $14,432. What did we get for the credit column of the income statement? $15,768. Okay, so we subtract the smaller amount, or the $14,432, from the $15,768, and what is the end result? $1,336. So we add that to the smaller amount, put a line underneath, extend it all the way across. So we add the $1,336, which, by the way, is that a net income or loss? Income. So over here on that row, we're going to put net income. We're going to add it to the $14,432, which gives us $15,768. Bring down the credit total, which matches. And what else are we going to do with this $1,336 net income? We're going to extend it all the way over to the balance sheet in the credit column, making sure our debits equal our credits over here. So extend that $1,336 to the credit column. Hope you can't see it. How about that? And now we're going to extend all those permanent accounts up here over to the balance sheet. Oh yeah, I'm sorry. I was looking at the wrong one. Thanks for telling me, now that I've totally messed this. So I'm looking at the adjusted trial balance, not the beginning trial balance. So 480 goes for balance sheet. This should only be 1,000. And then we do have 3,200 here, and then continuing on. Once we're finished transferring everything above income summary, including the wages payable that we already did at the bottom, we're going to add up the two columns and come up with new totals. So not so much to add this time. Total for the debit should come out to $72.40. And for the credit should be $59.04. And the real check is to see if we add our net income to the credit side of the balance sheet, it should match the debit. Let's take a look. $72.40. Bring down this $72.40. Double rule all of these because they are in balance.
Why do you bring the 5904 down instead of just adding it up and coming up with a subtotal?
This is a subtotal before you add in your net income. So that is a completion of the worksheet. Now from this information, you could create all of your financial statements with this information.